you talk about all these advantages. What are some of the risks? What are some of the vulnerabilities with using this sort of?
Okay, so some of the risks involved are this. Okay, the Ethereum blockchain and the ledger, the public ledger for the Ethereum network, it's new. It's still an infant.
Right.
It's very, very early on. You know, people try to compare it to Bitcoin, that it's going to be more powerful or anything like that. That is not true whatsoever.
Right.
The only secure network or the secure blockchain that we have right now is the Bitcoin blockchain. And I don't foresee that. I'm not even a technical person, but I don't foresee anybody's blockchain, whether it's public like the Ethereum blockchain or like the private blockchain that all the 42 banks have consolidated to make from R3, SEV or something like that. Even their private blockchain, nobody is going to stand a chance.
So you say that Ethereum is the weakest chain of the link?
No, it's not the weakest chain in the link. It's just one of the weak blockchains, period. So because of their
for
now, and because of their popularity, all the computer hackers that have tried to hack the Bitcoin blockchain, they're probably tired by now, not being able to hack into it. So what they're going to do now is they're going to aim all the computing and power and resources at the Ethereum blockchain. So right now, as we are speaking, right, there are hackers out there working day in and day out, 24 hours a day to hack into the Ethereum blockchain. The reason for that is because it's new, it's young, it has not been exposed to the wild for as long as the Bitcoin blockchain has. So because of that, they are not going to have the security and pretty much think of the blockchain as like the human body. When the human body is born and it's exposed to pathogens and diseases and things like that, flus and viruses and bacteria, right? What happens is it strengthens the immune system. If it survives it, the immune system becomes stronger and stronger. The problem with Ethereum is that it has not been exposed yet. And what I mean by that is that they don't even have an easy user interface for the common people to even exchange things with. Another thing too is that you cannot buy anything, any physical products or goods with the Ethereum units, the tokens, the ethers. So the tokens that are used inside the Ethereum network are called ethers. There's nobody that will give you a gun, an ounce of gold, or a plane ticket, or food for, or fuel or gasoline for your ethers. There's a bunch of places that you can go and get a gun, a real gun, ammunition, gold, silver, food, right, for your Bitcoins. I've bought several kilos of silver myself from Provident Metals with my Bitcoins. So I know that they will send you kilos of silver for sending them Bitcoins. Okay, so I know that's true, and I have several friends who have bought guns with their Bitcoins. But I don't know if anybody on the internet or if I've heard of anyone that has bought ounces of gold directly with the Ethereum
or the ethers of Ethereum.
So it's still new, and it just started trading. So the price volatility on the Ethereum is extremely volatile right now. So at one point it can be worth right now. I think let me see. Let me check on my trusty trading view charts here. So right now, as we're making this video, the ethers shot up from 31 or 32 ethers, to 32 millibits up to 35 millibits already.
So that indicates that volatility indicates a little bit of instability.
Yeah, because that volatility comes from several things. That there's a limited number of ethers that people can buy. That's one. A limited number of supply of ethers. It's not like the fiat currencies like the US dollar or the euro where they just print money. 1% of the, a small percentage of the population can print all the money. Okay.
So is this a little bit more risky than Ethereum because this is going over the Ethereum network, plus it's hardware driven, plus it's specifically designed for a particular market?
Yes, I believe that there are more risk involved with Slock.it versus Ethereum. And here's several reasons why. Because the Ethereum is the base layer in which the Slock Ethereum blockchain is for example, is the, what do you call that? Is the foundation. And then the Slock.it has to sit on top. Okay? It has to sit on top for it to work. So this foundational layer is not stable yet. It's not stable yet. So you're trying to build something on top of something that has not been proven to be stable and secure yet. So as soon as there are hackers right now trying to hack into the system and trying to break it and trying to steal all the ethers and trying to mess up the whole system. There's people out there that will do that 24 hours a day for the next 2, 3, 4, 5 years. Why? Because that's the easiest block. It's the second most valuable blockchain in the world, and it's the most vulnerable blockchain in the world. Okay?
So what are some things that investors should look out for when they're trying to make an investment into this technology, into this currency? What are some things that they should look out for, that they should, either good or bad?
Well, I have a high tolerance for risk, so I have a bias to pay attention to the reward side. And for someone like yourself who's not used to taking these massive risks in investing into cryptocurrencies, then you really, really have to be cautious and pay attention to the risk side. Like I said, the risk is that it's sitting on top of a blockchain that has not been proven to be stable. Okay, don't let the high skyrocketing prices of the Ethereum blockchain when it's being traded by a bunch of traders. Keep in mind, most of the traders that trade the ethers that are used on the Ethereum blockchain, they are not technical people. Okay, in other words, they're speculators, they're traders and investors like myself. They're not coders like my buddy LeonFu.com. Okay, LeonFu.com is a hardcore, one of the top developers in the world, in the iOS world. Okay, so guys like him, even though he knows all that stuff technically, even he is not doing the actual trading. The trading is done by myself and by my buddy Eric and stuff, because we are traders. He's just the fundamental guy on our team, and Eric, myself, and a couple other guys behind the scene that wishes to remain anonymous. We are the real traders on the team, on our on our crew. So Leon is like the main, like the chief fundamental guy, because he understands all that technical stuff much more than me and the traders. The traders on our team, all we understand is charts. And that's why we have Leon on our team, so that he handles all the fundamental stuff.
And volatility is good for a trader, right?
Volatility is good for a trader, but from you're going to invest into it and you're not trading. You're just investing into the initial offering. Then you really don't care about the trading. You just want to make sure that you invest in something that has potential to grow. And what happens is, on your side, you're going to hate the volatility. And because the volatility comes from two things. Like I said, the limited supply, and the second thing is that there's not a lot of coins available. There's not a lot of ethers available. Just like on the, this is a good segue into talking about the pre-sale or the ICO tokens, the Slock.it tokens. I don't know why I call it Slock.it, but that's easier to say than Slock for some reason.
I like it.
Okay, so if you guys hear me say Slock.it or Slock, it sounds the same thing. Slock sounds like some kind of porn fetish or something. I don't know why, but okay. But anyway, the Slock.it right here, I would say, okay, the one is the low volume, the low supply, and the second one is because of the low trading volume, it creates lots of volatility. If you trade stocks, for example, it's extremely difficult for you or I to move the price of Best Buy. It's hard for us to move the price of Costco or Apple or Microsoft or Dell stocks. But many times in the altcoin world, I have personally moved the price of it myself just by buying, getting in or out. I myself have moved the price, right? For example, in Factum, when the price broke the highs at 172, 171, somewhere around there, there was me who did it because I tried to take a big position right before the move up, and when I got in, it actually, because of the volume of factoids that I was buying, it actually pushed the price up, you know. So I think it was, let me see here. And I did not do that intentionally. Like, I was not trying to like move the markets or nothing to like do something crazy to manipulate the markets. All I was trying to do was that I was just trying to take a position, a long position in Factum before it broke up, in which I did. But the problem is, when I got in, it shot up all the way up to highs, and I made like profits on it immediately. But the problem is, because of the low volume, it came down very quickly as well.
So one of the risks is using Ethereum as sort of a speculative instrument and causing these fluctuations in price and causing these vulnerabilities.
Yeah.
And that's one of the things that these investors should look out for. If they see huge price dips in Ethereum, they should be concerned about their investment in Slock.it because it's built upon the stability of the Ethereum blockchain.
Exactly. Because now when you invest in Ethereum, there's only one risk factor, the Ethereum blockchain.
Right.
But now when you invest into Slock.it, you're doubling your risk. Whatever risk that you thought that investing in Ethereum had, you better double or triple it because it's sitting on something that's already risky.
Right.
You know, I mean, you're building it on top of a foundation that is very shaky, and don't let anybody fool you, okay? They're gonna all say that it's safe and it's secure and everything. No, it's not. If I was a computer hacker and I was a bad person, the blockchain that I would go after is the Ethereum blockchain. And you know, why would I go after a secure network like Bitcoin that has millions of computers and millions of ASICs chips securing the network when I can go hack into the system that is not secure? I mean, I expect the Ethereum blockchain to be hacked multiple times before it matures, before I would consider it a safe network. Right now, it's not a safe network, and you're building Slock on top of it. Okay, so those are some of the risks that I want you guys to be aware of.
But on the other hand, to play the devil's advocate, no risk, no reward.
Exactly. You cannot expect, like, you go to the bank and put your money I put like 50,000 into JP Morgan Chase Bank before, and after 1 year they paid like, I think, 1/10 or 1/100% interest. I mean, you know,
Right, might as well spend your money on a loan or something.
Yeah, you know, like this was just cushion. This is just like, you know, my living expenses that I set aside, and I was like, screw that. I'm gonna take that and put it into the Forex market and trade it myself, and then put that into a portion of it into cryptocurrencies and invest it. I'm not gonna leave it just sitting there just to earn $10 worth of interest in a whole year. Okay, so. I'm going to go ahead and conclude this video portion, guys, because I'm running out of video time here, and I'll continue in the next video. If you guys want to hear more about this, please let me know in the comment section below. And if you haven't subscribed to this channel, make sure you do. And I'll see you guys in the next video. And also, guys, if you have friends, family, or coworkers, or anyone that's interested in investing into cryptocurrency, make sure you do the right thing and share this video with them. And that way they have some knowledge and education on investing it into these cryptocurrencies that's coming from a neutral vantage point, a neutral perspective. So thanks for watching this video, guys, and I'll see you guys in the next one.